Hi, welcome to part 4 of our volunteer income tax assistance training for VITA services for West Michigan. We're going to cover adjustments, standard versus itemized deductions, and briefly talk about exemptions. I know we covered exemptions in a previous module, that's why I won't spend too much time on it. I'm Amanda Grover, and I'm the tax program coordinator for Goodwill Industries of West Michigan. So today we're going to talk a lot about adjustments and review that information. There's really not too much to it, so it won't take too long, but I do want you to be aware that there's adjustments that can reduce the taxable income of a taxpayer, and that these adjustments are located in the last section on page 1 of the 1040. You see me constantly referring to the 1040 as an overall form and to work off the different lines and sections of the form. Lines 23 through 37 cover all the adjustments that we're going to talk about. So if anybody has an adjustment, you'll find it in this section of the tax form. So what is adjusted gross income? As I just said, it's income that you have, and because of these adjustments, it reduces it so that you're only being taxed on a portion of the income. So you might want to know what counts as an adjustment. First of all, you'll want to know where you can find information about somebody's adjustments. So as opposed to going through the 1040 form, they've created in the intake and interview form a list of expenses or things that would be adjustments on a tax return. So it prompts you to ask questions. If somebody has indicated in the yes column of the intake and interview form that they have in fact had one of these situations, it probably indicates that they can take an adjustment somewhere in their tax return. Again, make sure you're referencing the designation for the different certification. So B on the on the intake and interview form stands for basic, which means that you've been certified to a basic tax certification level, and the A stands for advanced, indicating that you've certified at advanced. So these questions, if there's any yeses, you'll want to make sure to probe the client and see if there's any further information to see if they're eligible for one of these adjustments. The first adjustment that we're going to talk about is the educator expenses. So there's a deduction that somebody can take if they work within a classroom in a school. Typically it's teachers, but sometimes it's paraprofessionals or other educators in different circumstances. And if they've spent $250, they can use up to $250 that they spent out of pocket for school supplies. So if you see that somebody's indicated that they're a teacher on their occupation and the intake and interview form, you may want to ask if they've had to have any expenses out of pocket to cover any of the costs. So this might include anything from tissues to crayons, anything for any special projects. They can use that cost as an adjustment on their tax return. Just indicate to them that if they don't have a paper trail, that means receipts with them, that they will want to be able to pull those records, so from either bank statements or credit cards, just in the event that their tax return is randomly selected for audit by the IRS. Moving expenses are a possible adjustment. However, with our program and what we do with our tax returns, it's out of scope. It's only in scope if somebody certifies to military. So if you find that someone's at a tax site and indicate that they've had moving expenses, you may want to ask them right from the top how much they are and if the company paid them. If they paid out of pocket for moving expenses and they're very significant, I would recommend that the client go to a paid preparer. And that's just because we don't want to do their tax return wrong. We don't want to risk anything with the program or the IRS coming in or it being a secret shopper with the IRS. We want to make sure we're doing our due diligence and doing our tax returns correctly and within scope. The next 3 items are highlighted green, and that's because the software will automatically calculate them. So there's nothing you even have to input for these items. Half of the self-employment tax is an adjustment, and so the tax software will calculate that based on the Schedule C that you've prepared from their income. A penalty from an early withdrawal and that comes off of the 1099 interest statement. Again, something that just is automatically calculated, as well as any IRA contributions that have been made. So if somebody contributes to their retirement account, there is a possible adjustment. And again, the program will calculate that for someone automatically. Also a person, and this is probably the one we see most, not that we see adjustments a whole lot, but the one that we probably see the most is the student loan interest deduction, and that's for when people are paying back their student loans. So it can be up to $200 or $2,500. Tuition and fees is also a possible adjustment, but we'll talk about education credits a little bit later. But typically people don't use this as an adjustment, that it's more advantageous to get a tax credit, and we'll go through the tax credits. If for whatever reason a person is not eligible for either the Lifetime Learning or the American Opportunity Tax Credit, then they may use up to $4,000 that they've paid out of pocket for tuition and fees as an adjustment on their tax return. So let's delve in, see what some of these forms look like, and get a little better idea as to what I'm talking about. So I indicated that from the tax information that, and from the income section, that a person will receive an adjustment for the penalty for the early withdrawal from an interest from some sort of investment. This comes right off of that 1099 interest statement that we talked about in the income module. The student loan interest deduction. So like I said, it can only be up to $2,500 of interest paid, but we usually don't see someone with that high of student loans that they're paying off that much. But this is the 1098E, and that's what the loan interest is reported on. Again, most of the tax forms that people are sent in the mail have the labeling right here if you don't recognize the form number automatically. So this is how it's reported. The student loan interest will be reported right here in box 1, and that's really all you need to report that loan interest. And then, like I said, with the self-employment tax, half of it automatically transfers over and is calculated by the software, so that's not really anything you need to know. Once you have somebody's total gross income, so their adjusted gross income, their tax, their their adjusted gross income is first set off by their deductions. So there's a standard deduction, and then there's also an itemized deduction. And after that, the personal and dependency exemptions are applied to the person's adjusted gross income. Both the deduction and the exemption sections reduces somebody's taxable income, and based on the taxable income that it reduces it to, that's the amount of tax that the taxpayer is supposed to pay. So what I said is a little bit confusing. Let me give you a little bit better of an idea. So the adjusted gross income flows over on page 2 from page 1, where you just input all the income information. Over here on box 40, the program and TaxWise will indicate if the client should have the standard deduction versus the itemized deduction based on the information you input into the software. And then it reduces the taxable income to adjusted gross income minus the standard or itemized deduction. And then that amount of income is left here. And then the exemptions are applied on line 42. So that's the amount of people in the household. Basically, if somebody is of the standard of normal age, unless they're a senior, this box will be $4,000 multiplied by however many people are in the home. Sometimes the exemption rates are a little bit higher for somebody who's disabled, so it might be a little bit higher than $4,000 if there is someone with a disability in the home. Based on that amount of money, the taxable income shows up on line 43, and then the tax and what the taxpayer owes based on the amount of income they have is on line 44. Again, the program does most of this calculation, but I think it's important for you to understand where these numbers are coming from and how it's calculated. What are these terms and where are they coming from that I'm throwing around? So we're going to go into a little bit more information and into a little bit more detail on itemized versus standardized deductions. So a standard deduction is the amount that everyone receives for filing a tax return. It's basically based on that filing status as well as the client or taxpayer's age. And again, that's why I said that it was so important for you to really have a firm understanding on what the filing status rules are. You can also itemize. So people talk about itemizing, or they talk about gifts to charity. All of that falls under itemized deductions. So a person can count if they have significant costs that are higher than the standard deduction, they can do what's called itemizing. Let me break this down a little bit further. So if you're looking to see if it's more advantageous for a person to itemize or for them to use the standard deduction, first refer to this chart. A lot of the time people are only going to itemize or count their expenses if they're significant. If they've had a lot of medical expenses, if they're paying a lot on property taxes or mortgage interest, then you'll want to look at itemizing. However, for more than 90% of the population we serve with the VITA programs, the standard deduction amount is going to be what's most advantageous. And if that's the case, you just indicate that the client does not itemize on the tax return. And you'll see where to do that as you go through some of the examples with the TaxWise modules. So if a person is single or if they're doing married filing separate, this is the amount for the standard deduction. If they're a head of household, it increases, and it's even higher yet for somebody that's doing a married filing jointly or doing a qualifying widower filing status. If you think that with anything in these itemized deduction boxes, if the client thinks that they're going to be higher than this amount, than the standard amount, then you'll want to do what's called a Schedule A, and you'll want to look into these different costs. Luckily, a taxpayer, the client that comes in, will typically know if they want to itemize, and they'll bring all the documentation. If you do talk to someone and they've never itemized and you talk to them after going through the intake and interview form and after confirming if they've itemized or not, then you'll want to just go through and ask them and make sure to see if they've had any significant medical costs or any of, like I said, these mortgage interest or property tax bills that start to get as expensive as the standard deduction amount. So this is the mortgage statement. That's usually the first thing I try to look at to identify if somebody is really going to be in an advantage to claim to do the itemization. Usually the mortgage interest is the highest thing that people are paying, so we'll want to look at that first. If that's looking at several $1,000s and like it's going to be a really high cost, then that might be when you ask about property taxes. Sometimes property taxes will be on this mortgage interest statement, sometimes it won't. So the client may have to bring in the actual property tax statements, which we ask them to do when they're making their appointment. Also ask about medical bills. This is one piece that clients don't necessarily have all the documentation on and aren't as prepared to talk about when you're talking about their tax situation. So just see if they had a deductible that they had to meet, if there was a medical catastrophe and they had a lot of medical expenses that were paid out of pocket. If that's the case, then again, that's something that you might want to consider for the itemization. So how do you itemize? Itemizing is done on what's called the Schedule A, and you pull that right up in the tax return. The Schedule A will be listed in your trees form. And you go through line by line, and that's really the easiest way that I found to look and see if somebody is eligible. So you put in the money and the income, or sorry, the money information where it belongs. The first section, and they have everything broke down for you so you know where to look. But the first section is medical. The next is taxes. So again, this is where some of the real estate taxes and property taxes are listed. The interest paid. So again, the mortgage interest, that's the biggest piece over here in this section. And then there's gifts to charity. So if somebody comes in, and I do see this unfortunately a lot, somebody will come in and they may receive just Social Security. So they have that 1099 SSA statement. And they come in and they say, yeah, but I've donated, $2,000 to charity over the year. If a client doesn't have any taxable income, then there's no reason to itemize, because all you're trying to do with these itemized with the deduction, so whether it's itemized or standard, all it does is reduce their taxable income. The Social Security, none of that is taxable, so there's no point in itemizing. So again, this is just an area that you want to double check to see if there's anything that needs to be itemized, because it's going to be in that same section of how you take an adjustment. So medical expenses, like I said, are one of the reasons why people are looking to itemize. It's one of the top reasons. It's the first line in that Schedule A. And really, you can take the total amount above 10% of the adjusted gross income. So it's all kind of a math game, and in which case you'll want to make sure to go through the itemized deduction section of your 4012 resource guide to make sure you're not missing anything. Or if somebody asks about a medical supply, for example, are prescriptions covered? What exactly are covered? The 4012 is a great exercise or is a great resource. And then the 4491W has a lot of really good examples of itemizing. So it's one of those things that you just have to do once or twice to get used to. It can be kind of intimidating at first, but I am going to go through the module, the practice module, and it does provide a really good example of how to do an itemized return. It's really not too difficult after you get a couple under your belt. Again, that's what the site coordinators are for. They're there in case you have a question, in case something like this comes up. So don't get too flustered by all this information. Some of the information is just for your knowledge, so don't worry about memorizing it all. Include in the medical expenses, it can't be cosmetic, medical, it can't be anything that is dental or vision can be covered. There might be also some deductions in case somebody has to receive medical treatment at a different location. They can deduct mileage for any of their appointments. So you may get people asking about that. You cannot include vitamins or non-prescription medication, anything that's cosmetic, nothing like that you can put on that medical portion of the Schedule A. TaxWise will automatically take the deduction if it exceeds the 10% of their AGI. Otherwise, it's just going to be zero. So a lot of people ask that. That's just how it's calculated for the Schedule A, and then our software does that. But if the person were to file their own tax return, that's technically the correct way to do it. So the sales tax, that usually carries right over from the tax return, and that comes off of the W-2. So there's not typically anything you need to enter on the Schedule A for sales tax, but there is the property taxes. And this is an example of what the property tax form looks like. Sometimes, like I said, it's on that 1098 mortgage interest statement. But if it's not, this is an example of the city of Norton Shores. And really, I think most of the places in Muskegon, Ottawa, Oceana, Newaygo counties, they look somewhat similar to this. So over here, there's going to be a total amount due that they paid in their property taxes that can go under the taxes paid section. They can also count DMV and license fees, and they can count other property taxes that have been paid if they're itemizing. So again, this is an example. If there's a mortgage interest statement, sometimes there's some information on the real estate tax that's paid. And this is just some more another example so you can kind of see. This is again the mortgage insurance. That's something that can be counted, and so can the mortgage interest. The charitable donations, they have to have record for anything that's above $500 from the organization. The donations must be nonprofit, so there are a few questionable things like Chamber of Commerce and that sort of thing. Again, refer to your 4012 to confirm whether it's something that can be included in the Schedule A or not. The program automatically calculates all of this. If you have somebody that comes in and they volunteer a whole lot, they can count 14 cents per mile for any of their service. That amount may change for the 2015 tax return. We'll just have to see. That's not anything you need to know. You just need to know the number of miles. So again, all this information is probably going to be updated in your 4012 and on the tax software itself. I do give you specific numbers in this training, but know that the 2015 material has not been issued yet. So I am covering information that's from the 2014 tax year. So itemized deductions, you can also do any work-related deductions. So that might be mileage or money that was spent on training. A lot of the time, uniforms or tools for work are things that are being deducted on the Schedule A. On the Schedule A, you can also deduct any sort of union dues or from professional organizations. I do see those a lot, especially with teachers. You can do any costs associated with job search. Rules are really similar to a Schedule C as far as any of the costs for the business go. Also, home office is something we don't usually deal with, but if they have a number for it, we'll put it down for the client just to see if this itemized deduction is going to be higher than the standard amount. So there's a couple of miscellaneous deductions, and there's a section on the Schedule A that just says miscellaneous, and it has these items listed. This is where you can add in tax preparation fees from the previous year. So if they paid out of pocket in 2014 for tax preparation, that's exactly where you would include it. Also, the cost of a safe deposit box can be included here. The cost for license plate tabs can be included. And then gambling losses. So especially if somebody has that W-2G and they come in, we'll want to make sure to include any of their gambling losses over here on this itemized section. So again, standard or itemized, it's always the taxpayer's choice. However, if you go through and do a Schedule A to see if it's going to be a higher amount, the program will automatically take the highest one. So it'll take whatever's most advantageous for the taxpayer. Like I said, 9 times out of 10, probably more than that, it's going to be most advantageous for the taxpayer if they just take the standard amount. But I did just go through the Schedule A and itemizing in some detail. Again, you'll definitely want to go through your resource material in the publication 4012, and you'll want to review some of the examples that I've provided through the practice modules where I've shown you how to input information into the tax return. And this will cover a good itemization. Aside from that, if you have any other questions, as always, feel free to contact me and let me know. Lastly, I just want you to show you in this tax and credit section that we've been talking about for this module that this is where the exemptions show up. So again, there's the exemption and how many exemptions will be listed on that line. It's going to depend. So right now I believe the exemption is actually going to be worth $4,000 for the 2015 tax year. You'll get exemptions for personal exemptions. So you'll get one for the taxpayer if they aren't already a dependent of another taxpayer, as well as one for the spouse if there's a spouse. You'll also get one exemption for each of the dependents, and that flows down here. So it can be a dependent relative or a dependent child. However many people are being claimed on the tax return, it's going to multiply that. So the personal dependency, again, is just we're making sure that the taxpayer is not being claimed on another tax return. And for dependents, we're making sure that none of the dependents are being claimed on another tax return. We've gone through that in some pretty good detail, so I'm not going to spend too much time on it. Just a reminder, though, that if there's somebody in the home that's working and they are being claimed on a tax return by the taxpayer, say it's a son or a daughter that's working an after-school job, the parent should be the one claiming the exemption, and the child just needs to make sure that when they do their tax return that they're claiming 0 personal exemptions. So when parents are in with me and they indicate that their child is work, I just like to share this information with the parent to make sure that the child knows to provide that information to whoever's preparing their tax return. So then that's when you get the tax calculation. That's how you figure out how much taxable income you have. And then based on the taxable income, the tax rate is going to be listed right here on line 40. The tax rate varies slightly, but that's basically what you do. So how do you lower the taxes? Again, if somebody, just because you see the tax calculation on line 44, keep in mind that that's not the amount due. We still have some credits to cover, as well as going through the amount of tax withholding that the client has had withheld from their taxes, from their paycheck. So there's still ways to definitely offset that amount of tax that's due. So that's all I have to talk about for this module. Again, continue to practice doing the practice returns. If you don't have your login information, be sure to contact me. Make sure to watch the last training video, the last module that covers credits, other taxes, and finishing a return. Also keep in mind to watch the other training videos that include information on the Affordable Care Act, as well as some example problems that I've prepared for you so that you know how to work with the software. As always, if you have any questions, feel free to let me know, and thanks for watching.